is Brian Kersmanc with GQG Partners. I'm one of the portfolio managers here working on the emerging markets equity strategy that's used by Witan. So in terms of the firm and the background and kind of where I came from, I was a day one employee here at GQG Partners when we founded and opened the doors in June 1st of 2016. And for those of you that are not familiar with GQG Partners, it's founded by noted investor Rajiv Jain, who has over 2 decades of experience within the emerging markets and global markets, and leveraging that experience, bringing it over and starting GQG. And I've been fortunate enough to work on that, as part of that portfolio management team here for the past 6 years. So the mandate that we manage for Witan specifically is an emerging markets, mandate. And one of the things that we do here at GQG, one of the things that we have as part of our philosophy is this concept of forward quality, and basically looking for sustainable earnings trends and looking to where businesses, again, on a forward-looking basis are exhibiting higher quality than maybe what we've seen historically, what you've seen in a classic backward-looking screen, and trying to execute on that. So the investment philosophy behind GQG, and really the cornerstone that we built this investment shop around, is this concept of forward quality. So a lot of folks do look at backward quality, they use screens to make sure the quality is looking good historically. What we're trying to do is that even if a company may be a little bit beaten up in those screens, to assess the forward quality. Is there pieces coming from a business perspective coming to place that are allowing that business to be an exceptionally high quality compounder or high quality business model on a go forward basis to really give us a durable earnings stream going forward? Yeah, so in terms of the investment process and how stocks are actually selected, we're a fundamental bottom-up research organization. So getting into the weeds, finding different things about the companies that we think could be differentiated, maybe we could drive a differentiated view. We take a long-term view on the companies that we hold, but that's not to say that we won't react and be very dynamic when new information comes into the system and changes our view. So you will see us be very adaptive over time and move the portfolio and position it in that way. Portfolio does tend to be fairly concentrated within emerging markets context. We can go up to 80 names within the portfolio, but we do really want the top 10, top 20 of the portfolios to really drive the bulk of the alpha. So top 10 would be about 35 to 50% of the portfolio. Top 20 names would be about 2/3 of the entire portfolio in terms of weighting. So we really want those core names to be driving really the compounding of the portfolio overall. So in terms of what the advantages of having a common platform with a lot of really interesting and differentiated managers as part of this collective wisdom, Witan's collective wisdom, if you will, is that you get a lot of these differentiated viewpoints and sort of this collective trust of knowledge across a bunch of different managers that allow you to get these differentiated approaches in many different ways, diversify those so you're not taking on too much idiosyncratic in any one particular way, but really take advantage of a lot of these differentiated thought processes overall. So in terms of our outlook on a go-forward basis and how we think progress or see progressing on a go-forward basis, I think the one thing that we maintain, or we make sure that we're doing, is we're trying not to predict what's going to happen. We're trying to prepare for eventual outcomes that could happen.